Okay, so I've actually started the recording right now. So this is a live recording done on February 28th, 2016. And it's done for three of my students right now, three of my private mentoring students. By the way, Gabor and Yuri, John has recently signed up as a private mentoring student too, so feel free to share everything with him now. Okay? Um, so today's class is, and this video I'm actually going to use for marketing purposes as well too. Um, so that we can start to attract more people to the site and we can keep the site going and have a happy community. I'd like to get about 50 regular clients in the site on a daily basis, and I'm going to use this video both as an education for you guys, but also as a little bit of free knowledge for people that are considering joining us and people that are considering joining the room and wanting to learn to trade. So um, today's lesson comes from last week's videos that we made. We're going to cover two things that need to be reviewed. One of them is going to be how do you add to a winning position? And I think we're going to cover the basics of how do we do that right now. So we're just going to take any random period of time on any chart. I'm going to just see if I can find three different market conditions, four different market conditions. In the first market condition, we need something that's in a recognizable, sustainable trend. So let's just use this right here because it's the first thing that comes to my mind that we can see here. And it doesn't matter what the trend looks like. Like obviously, different trends are going to have different shapes, right? The way that I want you guys to really look at a trend is to really look at the angle of acceleration or deceleration. Okay, so if we were to look at a trend, let's just take a trend channel right here. So we take a trend channel here. We can see here, here's one part of it, and then we can see here there's another part of that trend channel. Now, when you look at that trend channel, the most important thing that I look at whenever I'm looking at any quote-unquote trend is the angle, okay? The angle of ascension or descension, right? Now, if I were to draw a straight line across this bottom here, okay? By the way, guys, there's going to be some background noise as well too. My fiance is just doing some stuff here, so just ignore the background noise. This isn't a professional recording room. This is basically my home office. So if I were to draw a line across this angle here, everybody's familiar with a protractor, right? 90 degrees being up here, 180 degrees being over here. What degree would you say that the average of that trend line would be? Remember, if this was 90, what would you guys suggest that the average of that trend line would be? John said, or Yuri says 45. Gabor says 45. What do you say, John? 45? I don't know about that. I'd say that's more like 60, right? I'd say 60. I could be wrong, right? But just imagine a protractor. You guys know what a protractor is, right? Those half circles, right? Um, and again, imagine this being the center of the protractor right here, right? Let's make that nice and thick. Okay. So if that was the center, right, and this line down here was the base of our protractor, right? Would you really say that's 45? Like does the angle, maybe the bottom of the trend line would be 45, right? Maybe. I'm going to say that's more like 60. Remember, this is 80, right? And a protractor would look like that, right? I think it's a protractor. Do I have that right? Going back to my math days. Yeah, right. So As you can see here, whenever I look at any trend, what's really super important to me is the angle of ascension or descension, okay? The momentum that's in a trend, okay? And I would like you to start to look at trends like this from now on, because it's really important that you do. Now, once I've established um, how fast are buyers taking control of this market, once I've established how fast buyers are in control of a market, I can now have some type of gauge in order to decide how to add to a position. Okay? So let's just play a little game here with our little protractor. So we start to see the angles of ascension when we start to make higher highs. Okay? So initially, let's assume that we take a say one lot down here. Okay, so you get into the market down here, you take a one lot. Okay, I just make these really big. See if I can make it really big. Do that. I'll go. Okay, that didn't work quite well. Let me just get that down there. So I have a one lot. Let me see if I can adjust the font here. Make it a little bigger, bold. Maybe that size. Okay. That's default. Okay, so there's our one lot down here, okay? So I've got my one lot on down here, and I want to add to a trade, okay? Now let's just say that our target is this swing high up here, okay? And so we're going to go for this target up here as our swing high. So we get into the trade down here, and the trade starts to work for us, okay? Now, so this is our entry right here. Oh, I can do an arc. That looks pretty cool. I'll have to play with that later on. Here's our entry right here. Let me get an arrow. Our entry's right here with our one lot, okay? So we've got into our trade right here for whatever reason we've decided to get into a trade. Now, the trade starts to work for you, okay, and we can see here that after we kind of clear this high here, the market has a pullback. And it's right here at this point in time that we see that the market is making a new high. So we have some type of basis to consider a trend off of, don't we? Okay. So if we were to kind of do the same thing with a trend line here, and we were to say, okay, here's our swing low here, okay, and here's our swing high here, which we know this is our swing high at this point in time. Why these lines aren't being extended. Okay. We can see that that angle of ascension, we knew that angle of ascension was still approximately the same, right? Maybe a little bit more. So when we see this market take out this high, and we say to ourselves, okay, we've got a good cushion here on our one lot, don't we? Right? Now, once we take out this high, if I want to add to this position, let's say I want to add on a breakout, okay? So if I add on this breakout right here, once I get the confirmation, I can now see that if I'm in here and my second entry is here, okay, I'm not suggesting you add on a breakout because I don't like to do that, okay? When I see that my second entry would be here, let's say I wanted to add here, if I'm going to add one lot, another one lot here, where's my average price going to be? Okay, my average price is going to be the difference between 1804.75 and 1837.75. So let's just do some quick math. 1837, let's just use 1837.50. Okay. Plus 1805 divided by 2, 1821 and a quarter. Okay, so let's just note that. So our average cost is 1821 and a quarter around here. It's our average cost right there, right? Everyone agree? Okay, so now if the market backs up to that level, I know that that's where, if I want to add a position on this breakout, I know that that would be my average cost. Okay? Now, with a trend this quote-unquote strong, you can see this is our original trend. Let's just get rid of this one first. Okay. Would you say that a 60-degree angle on a trend is a strong trend, a weak trend, or a medium trend? Yuri says medium. John says strong. Gabor says relatively strong. I would say more like strong, right? You know, like let me just show you what, like, obviously there could be 3 different types of trends. So let's just take a look at that right now. So let's say a medium trend starting from this point in time would go something like this, right? Oh shit. A medium trend would go up something like this, where the angle's like what, 25 or 30, right? So that would be a medium trend, right? Would you agree? That'd be a small. Well, I don't know how to. I'm just making up words here, okay? You get the idea that I'm trying to say. So this would be one type of. This would be a weaker trend. This would be like a medium trend. Let's say this. Let's use this as a weaker trend here, and let's use this as like. Let's use this as like. That would be a strong trend. Okay. So we'll just exaggerate the point here to to illustrate the point here. So let's say that's weak, that's medium, and that's strong, right? So this would be kind of like a medium trend. Would you agree? Under this context, okay? There's probably several different degrees here, but I'm just using some broad examples, okay? So we know this is kind of like a medium trend here. So what we want to do in this particular situation is we want to understand, okay, we're in a medium trend. So when I clear this high here, you know, my question becomes to myself, how aggressive can I be if my average cost is here? Did you understand that? Okay, this is where my average cost is going to be going forward. Can I be aggressive and move my average cost up higher? So what do you think? If your average cost was here when you cleared that high, should you add 1 lot? Or what would happen if we added 2 lots up here? Let's just do the math. Okay. So at 1837.50, let's just use 1838, okay? Okay. Plus 1838. So we add a 2 lot up here, plus our original cost, 1805. Let's just use the round number, okay? We could, divided by 3. 1827. So you can see in a medium type of trend, okay, in a medium type of trend, having a stop at 1827, remember we don't see the future, right? That looks pretty safe too, doesn't it? Because that trend is pretty strong. Make sense? Does that make sense? We could actually, you know, knowing when we have these 2 points and knowing what our potential trend line is, right? We could actually have an average cost anywhere below that trend line low, couldn't we? So 1831 could be our average cost. Does that make sense? So let's just do some math here, and we'll just show you what I'm talking about. As soon as we break this high at 1838.50, we'll use 1838 again, okay? Times, now we're going to do 3 lots here, okay? Equals, okay? Plus our original position, which is 1805, divided by 4. Oh, shit. Damn it. Divided by 4, 1829. So there you can see. Do you understand that in this context, I could have added a 4 lot with the strength of this trend? Make sense? Now, why would you want to add a 4 lot there rather than taking a 5 lot down here? What's the obvious answer? Because you're fucking right. And I'm going to swear. For those of you that are going to be listening to this for the first time, because I'm right. I was right about my original trade. Now, wouldn't it make a lot more, I'm going to swear again, so plug your ears if you don't like it, fucking sense to build a position when you're right rather than start off on a position when you're wrong? Doesn't it make a lot more sense? Okay? So, let's say that you can afford to take a 5 lot. Your bank account, your capital, allows you to take a 5 lot. Should you be taking your 5 lot down here? Fuck no. That's stupid. If you're right about your direction and about your trade, okay, and your target's way up here, then don't be an idiot. You don't need to be an idiot, okay? The safer, smarter play to do is once you've established that you're right and it's moving towards your target, and you can establish the rate of ascension on that particular trade, if this was a long trade, then be smart, okay? Add to your trade when it makes sense to do so, okay? Now, I never usually like to add on breakouts, okay? I never usually like to add on breakouts. So I personally, when I got that confirmation, I'd wait for some type of pullback, okay? Some type of pullback. Because if I'm adding here, and let's pretend we don't see the future. Remember, I'm just taking a random thing here, right? If we're adding, oh, shut up. Okay, if we're adding here, okay, then my average cost is going to be 1829.75, okay, or whatever that was, okay. Now, if I can get a better price, now this one just happened to go higher, we couldn't have got a very much better price, but the point being that if this particular market had pulled back, and remember my target's way up here, so I'm going to get a lot of opportunity to buy on a pullback, okay? In this case, it probably wouldn't have worked out well for me, but I'm just taking a random case. In other cases, you'll see it does work out a lot better, right? If I wait for a pullback, okay, I can adjust my average cost, and I can even take more than a 5 lot here. Okay, I can maybe take if this would allow me to take a 4 lot there, because the math would have worked out where I could have trailed my stop properly for break even on the trade. Okay, then if I can even get a lower price, I can reduce my average cost. Does that make sense? Okay. I can reduce my average cost. So I personally do not like to buy on breakouts, but for anybody listening to this that wants to buy on breakouts, feel free to do so. Now you know how. Okay? I don't do it. I like to buy on breakouts. I know this trade didn't work out the way I would have liked it to. I would have preferred a cheaper average price. I would have preferred to buy down here. I would have preferred to add to my position down here, but this is just my own personal situation. Let me just get rid of this. I would have, rather than buying here at 1837, I would have preferred to buy down here at 1832 or 1833. Okay, because now my average price is even that much safer. It's just a personal taste. Okay, it's completely up to you. Feel free to buy on breakouts. A lot of people do. I don't. Okay. All right. So now you've got, once you've established that you're correct on the trade, and you've gone in with like a small test size here, you want to make a shitload of money. But this is what most traders do. Most traders are idiots, and I understand that, and forgive me for being arrogant, right? They want to get in right here before they know they're right. Now, in hindsight, getting in down here with a full 5 lot obviously is brilliant, right? It's brilliant in hindsight. However, how often are you going to get confirmation that you're right and you're going to get your entire move? 50% of the time, right? Maybe even less if you're lucky. Very few traders can catch a move that size, okay? That's a big move, right? Very few traders can catch a trade that size that often. I'd say most traders catching a move of this particular size and magnitude this often is very, very, very small. Okay, now again, you can work this on a macro scale, you can work it on a micro scale, you can work it on a 1 minute chart, you can work it on a 30-minute chart, you can work it on a daily chart. It's all relative, right? But you get the point, okay? And if you're constantly getting stopped out 50% of the time, or even 40% of the time with your full 5 lot here, you are going to lose money, okay? You're going to lose money. This all-in, all-out mentality is why so many retail traders are basically missing the boat. Now, stop being a trader right off the bat. Okay, I want you to stop being a trader. Forget that this is the ES, and I want you to imagine this is a pair of running shoes, and you own a running shoe store. Okay, so let's imagine that you own a running shoe store, and these new shoes come into your store. You don't know how they're going to sell. Okay, and so you decide you have let's say $500,000 to buy shoes. Why should you buy 500,000 shoes before you know what they're going to sell for? So when you buy your 500,000 shoes, they're selling for $1,807. Okay? So if you buy $100,000 worth of shoes and then you see, oh shit, these things are flying off my shelf. Now, how are they flying off your shelf? Are they flying off your shelf weakly, mediumly? Again, I'm just making words up here, guys. Or strongly. Okay? Well, see, they're flying off my shelf fairly well. Fairly mediumly. I like when I make words up. Always cracks me up. So they're flying off your shelves mediumly. Now you can feel safer about putting your other $400,000 to work because you know this fucking stuff is selling. Okay? If you buy your 500,000 down here and they start to decrease in price, okay, and you're wrong, you're committed. Okay? You're not in this. Like when you buy a shoe store, are you in it for a day? No. You're in it for life. Okay? It doesn't matter whether you're a day trader or a weekly trader or a swing trader. It doesn't make a difference. You still have to, whether you're using a 1 minute chart, whether you're using a 5 minute chart, whether you're using a 30-minute chart, it doesn't make a difference because one trade doesn't differentiate from the next trade. It's all just inventory. Do you understand that? It's just inventory. Okay, this is how professional traders look at it. We're not looking at it, this is a trade on the ES. No, I'm looking at a product that has a supply, a demand, and how strong is that demand? Well, I want to buy a product that I believe has a demand. Once I see that demand is increasing, I want to intelligently and like a business owner increase my exposure on my direction that I believe that product is going to move. Do you understand that? Okay. So, and wouldn't it make sense to be less committed until you're certain that you're going to get the result that you want on your product? Okay, don't think of trading other than that. You're a shoe store owner. You have $500,000. You only have $500,000. That's your whole amount of money that you can make a living on. Okay, so don't overcommit. Once you see the direction, once you've established the trend, once you can work out where your average cost will be, then you commit. Because if I commit down here at 500,000, I get stopped out, I take a full loss. If I commit up here once I get confirmation, okay, that I'm correct in my ultimate goal, which is up here, okay, I can now work with the numbers to build the rest of my inventory safely. Because once I've got that built in, isn't it so nice to have a, let's say, a 6-lot position on right here? Wouldn't that be sweet? Imagine how you're going to feel knowing you have that full, we'll say a 5-lot here, knowing you have that full 5-lot right here, okay, rather than the stress of having that full 5-lot down here. Now greed might kick in and you might say, but Steve, I won't make as much money. And I'll say to you, yeah, but you won't lose as much money. Okay? You won't lose as much money when you're wrong. You're going to make a shitload of money when you're right, because you're going to be in a completely stress-free situation with an average cost that looks like that. Now, let's say that you haven't even got to your target and the market starts going higher. Well, let's pretend that we decided to buy breakouts again here, and when the market takes out this little swing high right here, you want to add to your trade again. Wow, now let's do some math. Now I can, instead of taking a 5-lot with an average cost of right here, what if I want to be very aggressive, and I now have again established a new rate of ascension on this trend? So let's just do that. So now my trend line, when I break that high, looks something like that, doesn't it? As soon as I break that, I'm going to just put a different color in here. As soon as I break that new trend line here, here's my new rate of ascension. Okay? When I take out that swing high. Now let's pretend that I want to buy on the breakout again, okay, here, which is fine. Like, I'm just taking a random example here, guys, okay? So let's pretend I want to buy on the breakout again. Now, knowing that my average cost is 180, see how all I need is my average cost to be 1842 when I have that trend line. You see that? 1842 over here, okay? Let's just find out what that is, okay? So we have 1 lot at 1805.70. Let's just use 1806. That's 1806. Okay, oh, sorry. 1806. Okay. Let's just put that into memory. Okay. Clear that. And then we have a 5 lot at 1838. Okay, so 5 times 1838. Okay, let's put that into memory. Like that. Okay. Now, we want to add here, and we want to figure out if we want to get our average price to there. Okay. That would be 1844. Let's find out how many we can add. Okay. Now, guys, you have to excuse me. Like, I kind of do this in my, like, I've been doing this for so long, I kind of do it in my sleep, so to speak. So I don't have an exact formula how to do it. Those of you that are smart can figure out the exact formula. I just guesstimate, right? So I know that I now have a 6 lot on, and I now want to see how much more can I add at 1855 to bring my average cost down to 1844. Now, for those of you that are really math smart, I'm sure there's probably an actual equation that you can do it, but I'm just going to guess. Okay, and I'm going to just say, okay, if I add at 1855, I'm just going to say, okay, what's happen if I add another 6 lots here? So I go 6 times 1855 equals, and I put that into memory. Okay. And now I go, I see there's my average right there, and I have 1, 6, 12. It's divided by 12. $184. Look at that, almost perfect. Almost got it perfect. You see that? A little bit lower. So I can now know that I can now add, if once I have my direction correct, once I know exactly what my rate of ascension is and it's strong enough, I now can add, okay, another 6 lot. Now, I got a 6 lot now working here. I got a 12 lot working here, sorry. So I got a 6, total of 12. Okay, 6 lot, total of 12, with an average cost right there. So now when you hit your full target, okay, of 118.78 on a 12 lot, okay, let's just do, we won't do the actual dollar amount, but let's just figure it out, okay. So we have 1843 is our actual average price, and our profit is 1805 to 1880. Okay, let me just do this. Memory plus. So we have 1805 subtract. Just use 1878. Okay. Okay, that's a full 73. Well, it's times 4 because it's the ES. Okay, but let's just pretend it's anything. It doesn't have to be the ES. Like I said, this is shoes. Okay, so now you've got $73 worth of profit. Okay, on a 12 lot. Okay, and you've done that. Now, what would be the difference if you took your whole 5 lot down here on $73? So if you took your 5 lot, okay, so 73 times 5 gives you a total dollar profit of $375, correct? Okay, let's just clear that. However, if you have, oh, damn it. What happened there? If you have a 12 lot, okay, and the difference is 1843, I believe it was, right? 1843. 1843. Subtract 1878. $35, okay? So $35 times 12, you can see you make a lot more money. Not a lot more, okay? But you make more money. You know, what was the other one? 375? I can't remember. I didn't put it in memory. What was it? You guys remember? 350. I think it was 350, right? Hello, Bueller? Bueller? Anyone here? Okay. Yeah, I think it was 350, right? 375, thank you. So you're making more money, okay? You're making more money, okay, with less risk. Do you understand that? You're making more money with a lot less risk. Any questions on that? Make sense? Okay. So whether your total is 12 lot or whether your total is 5 lot, the lesson that you want to take away from all of these things is twofold. Okay. There's no need to put all your risk at the beginning of a trade. Okay. Only amateurs do that. Okay. If you owned a shoe store and you needed to buy, you need to run that shoe store, why should you commit all of your capital to one pair of shoes? You wouldn't fucking do it. Okay? You wouldn't do it. That's what an idiot does. Okay? Only a gambler would commit. Now you might say, well, Steve, I'm only using 2% of my account. Okay? But wouldn't it be even better if you're using 2% of your account on a single trade to still get the same outcome? Okay. Now it doesn't matter if this is 75 points or this is 7 points or this is 7 ticks. The same thing can be held true. Okay, I'm using a 30-minute chart here to explain it to you. It doesn't matter if it's 75 points, 7 points, or whatever. Okay, once you've established that you're correct, once you've established how much is that product selling off of my shelf, I can now safely add to the position. Now again, I like to add on pullback, so my average cost probably would have been a little bit different, okay? But you get the point, okay? Make sense? Good. Good stuff, okay. So now let's take a different environment than this. All these drawing tools. Okay. Now, let's take a different environment. I'm just going to randomly grab anything that I see. Let's say that I was trading in this environment, okay? So, a choppy, balanced market, okay? Now, in this particular situation, okay, I execute a trade down here, all right? Let's just say I execute my trade down here. Okay. Execute my trade down here. Okay. Now the market, we can see here, does not actually go higher. It does clear that high. Now if you were saying, okay, I'm going to execute my one lot down here and I'm going to add this is why I don't trade breakouts personally. Okay. I prefer to get a pullback. Okay. The market breaks out here. Okay. I have my rate of ascension. We do the same thing again. Would look something like this. Okay. When you see, because here, this is what I know. At this point, this is the point where I know my rate of ascension. Okay. I can now use this pivot right here. So I can now say, okay, that's a relatively medium type of trend, isn't it? Remember, we don't see everything to the right here, okay? It's a relatively medium, weakish medium, right? If this was our protractor, this is a weakish medium type of trend. Everybody agree? Okay? All right. So you can see here that this is why I don't trade breakouts. Okay, if you traded the breakout here, you would have got stopped out here using the same calculations. Okay, doing it the same way, and you wouldn't have worked out. Okay, now I like to trade pullbacks because I can get my average price. So I would probably have watched this. Okay, I would have added my one lot here. My one lot goes here. Okay. And then I see the market pull back, does not continue on the breakout, and I would probably have added, just extend this here, would have probably have added, knowing my rate of ascension, I probably would have added right here. Okay, so let's say I want a 5 lot. Okay, I want to build into a 5 lot position. Okay? When I add right here, my average price is going to probably be a lot cheaper. Now, in this particular case, I probably would have got stopped out break even. You understand that? Because if I'm adding a 5 lot here, I still would have got stopped out break even. Okay? Because we didn't get the continuation of our product selling. Does that make sense? Okay. Again, and I'm glad I'm showing you this example because it's really important. This is going to happen a lot. So you buy your shoes, you buy your $100,000 worth of shoes, you're expecting that product to which you're selling at 1822, you're expecting that product to maybe go up to 1844 at this point in time. You're expecting at least 1867 on that product, okay, and maybe more, okay? So when you buy this particular product, you don't know what the demand is going to be. So, you buy the shoes and you can see there's a strong demand on, the first couple of days, and then the next day nobody wants to buy it, and then the next day there's a bit of a demand, but then the next day nobody wants to buy it, and then the next day there's a bit of a demand and nobody wants to buy it, and then the next day there's a bit of a demand, nobody wants to buy it, and then ultimately the shoes become very popular, okay, and they ultimately go they don't ultimately do anything. They just never go anywhere. But you get the point. Okay? You get the point. The point being is that I was able to take the risk after I got the feedback. And that's what this whole lesson is all about. Okay? Stop taking so much risk in the beginning. Even if it's 2% of your accounts, it's still a stupid thing to do. Okay? It's still a stupid thing to do. There's no need to. Because if you are right about the demand or lack thereof demand or selling supply of your product, there's plenty of time to add to your position. Does that make sense to you? Again, this could be a 30-minute chart. This could be a daily chart. This could be a 5-minute chart. It could be a 1-minute chart. It doesn't really make a difference because hopefully you're not just scalping you're not a market maker. You're not just scalping for pennies. Make sense? Any questions on that? Clear as a bell? Wonderful. So your next exercise is to start to try to do this. Every time you take a position, okay, and your position works, I want you to start asking yourself, based on the context of am I right, long or short, okay, where can I safely add to a position to affect my average cost so that when the position moves to my ultimate target, I can maximize my profit and minimize my risk. Okay? How to add to a winning trade, lesson 101. Okay, this is the basic introductory to it. Excuse me. I do teach a more complex approach to this. However, this is the basics understanding of it. Hopefully, if you like this video, you'll visit our website and you'll join the rest of us in the room each day where we do this kind of stuff day in and day out, and we make boatloads of money. So to my existing students, thank you for participating in this brief introduction, how to add to winning trades. For anyone considering becoming a student, get your ass in gear because this is the best education by the best teacher that you're ever going to find anywhere on the internet. Well, actually, there's one guy better than me, but I'm not going to tell you what his name is. Anyways, thanks, guys. Hope you enjoyed it. And see everybody in the room on Monday morning. Bye for now.